Good morning. New day, fresh start. Let's get after it. So I wanted to point out here on the screen share, if you could see, uh, possibly we should start at the daily chart. The daily chart is not telling us much other than we are below the 50 moving average and we are below the kind of the faster 9 and 21. But the 100-day moving average continues to act as support as well as this ascending wedge trend line. That's something to be mindful of for today, especially because I think we could, in any event, we could probably test that area. We in any event of weakness, and right, it today it coincides perfectly with the 100 moving average. Also, it's at a significant support level, right? So let's circle back to the trade setups, and you can see that trade setup number 3 is a support buy at 68.12 to 68.16. Guys, I think that level is going to come into play today. Whether or not we bounce at it, I don't know. We've bounced off the 100 period moving average and this ascending trend line 3 times. I always ask myself this. I framed everything within this context. Can it get me, if I take a position there, can it get me to a first target so that I can reduce my risk and let the market play out, right? Because if we come down here and we bounce, and I want to be long in the tail, I want to be long near the low of the day, and hopefully I can catch a runner. So the entry, the engagement tactic becomes very important because you want to know, hey, can I get to a risk-free position? So that's how I kind of frame all the levels that I use and how I get tactical about my engagement with those levels. All right, so moving on to the 4-hour chart. All right, for the 4-hour chart, something really interesting here. So I think I have to show you this. Semis, let's see. Semis are bullish and they're above their fast period moving averages, right? Okay, so keep that in mind, right? Because every time ES comes down into the lower balance range, now mind you, this is a 4-hour chart, right? And we know from our work that we have a support area at 6,800 to 6,812. Every time we come into this lower portion, the lower portion of this balance area, ES finds buyers. Just the same way when we traverse to the top of the range, we find sellers. Now, keeping that in mind, let's remember that we haven't been to the top of the range since February 10th. Okay, so we've just been ping ponging in between this larger range, and that's denoted here by this quad setup that I have, just marking out the edges and the center of the range. Now we are in the lower portion, we're in the lower half of that balance range. So going back to the chart, keeping in mind, right? So we have this 6,800 support level. We know that from the work. We also know that semis are bid, right? Look, is there a scenario where ES breaks down and kind of does something like this, right? Where it comes down, it comes down here, it comes back up, and it shoots down while the semiconductors are still at highs? I don't know. I maybe, right? Anything's possible, but I wouldn't get too bearish down here. I can't, not until I see a larger, more confluence from other markets, right? Like, let's check out the Russell. What's the Russell doing? Because the Russell's been leading the charge, right? So let's see. So in order for ES to break down, right, and get really bearish, kind of take out these support levels at 67.50, this lower trend line at 67.16, right, and break the balance low of 6,800. Is that going to happen when semis and Russell are at their highs? Maybe, or is it more likely, right? Is it more likely that we come down here, we kind of scare everybody's pants off, right? And it looks like it's going to crash. That's it. Bull market's over. Possibly, but I don't think so, because the evidence states, right, historically we're seeing every time we come into these areas, ES finds support. Now, could we test down here? Sure, but I think that anywhere in this range, I'm pretty sure we're going to find some support. Whether that takes us back to the top of the range, I don't know. Nobody knows. But what I do know is that up until now, every time we've kind of dipped into this area, and this is dating back quite a bit, right? I mean, our first bounce from this area was in December, was on December 17th. So we had a bounce on December 17th. We bounced from the mid area into the new year on January 2nd, another bounce on January 20th, another bounce on February 5th, another bounce on February 17th. Okay. And now we're testing the bottom of this range. If you're a swing trader, what are you thinking coming into these lows, right? You're thinking, hey, maybe I'll be able to catch something. Maybe I'll be able to catch a swing back to the top of the range. All right. So let's just keep that in mind. Also, remember, the daily has this support area right here, right? So it has this larger pink trend channel, that's this larger pink trend line that was in play on the way coming up. We bounced off it once, twice. We bounced on it. We bounced off it on this day, and then we lost it the next day, but we reclaimed it, and then it's held again once, twice. So there's multiple confluences of support right into this range today. So that would play out something like 67.75 to 68.15. I know it's wide. I don't design it. I just call it out. All right, there's the opening bell. All right, that's the bigger picture look. Let's see what we get. Already we can see that we already, so look at this. All right, guys, heads up. So we already tested the overnight low, and immediately let's see what happens here. I think order flow reads are going to be really important today. Again, and I had in the pre-market, I put out kind of like I'm going to start putting out daily kind of the context of the setups, and there's so typically on a daily basis, I'm giving out the setups, and those are the plays that I have, and I really want everyone to benefit from these, and I think that I hope that if I share a little bit more in terms of what the thinking is behind them, it will help people engage more with them. I feel that just giving someone a buy here, sell there. I know if I was a trader, I would want to know more than that. I would want to know why that level matters. So let's just keep that in mind for today. I put out that write up in the morning. Give it a look. If you let's see, what time was it posted? It was posted at 7:56. So if you want to scroll back and take a look at that. All right, so now we're coming into the low here. Yeah, we're already flushing through the support buy number one. That's trade that I took earlier is already collapsed. We're collapsing through it. Let's see what we find here. Again, I'm just going back to while the trading day is going on, I'm constantly referencing my trade plan. Where are we in reference to that plan? Because I know that, so that those were those levels that I mapped out pre-market. I know that that's where I want to be paying attention to. In here for me would just be diddling in the middle. I don't want to do that. I want to try to stick a move. I want to try to make some money, and then I want to get the hell out of Dodge. All right. So so here we just put in a low at 68.35 quarter. I maybe if we reclaim the 42s, but my attention is going to shift now to set up number 3, and that's a support. And I think that's that's a strong target for today. There's some other stuff in why I think that number is going to print today. So if you want to look at a short idea in here, even though I didn't map it out, I think that if you get a back test of the overnight low, perhaps that's something that I might engage even, right? Where we let's just see how this bar closes first. Let's see what we have here in terms of fib clusters. Man, the fibs got cleared out, dude. This is it's not good for the bulls, right? I mean, I trust those fibs with uh with my money, and so I can't believe they got cleared out. Let me just see what the look back period is here. Let me lower this down to 20 days. See if I can get something a little bit more recent, but I doubt it. Yeah. Okay. All right. Good. 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 So we have kind of a fibs cluster of support is 68.20. Now let's go see if that lines up with anything in the setups. Yeah. So it's going to line up with our 68.12 to 68.16 band level. That's great. That's excellent. That gives me more conviction down at that level. All right. So before we get there, though, right, let's let this bar close, right? Remember, keeping in mind that it's only market's only been open for 3 minutes, right? In terms of structure, right? If we're gonna take a fade at the overnight low, right? So thus far, we have a we have 93 contracts traded at the low. It looks like we're gonna take that out now too. So this is just they're selling it. Hopefully we get some structure here where we come where the move will end up looking like this, and maybe we can get a test in here, right? And then another move down here. But it looks like that trade then came and went. That 6,800 is a magnet. We're headed right to it.
All right, so keep that in mind. If it gets there, that's in between the D level and the first level of the money box. Also it's the implied first deviation move in that area. So that's going to be a big area. So 68, 68.12 area. All right, that could be a magnet right now. Magnetism. All right, crude oil short playing out so far. And again, we're short on the ESNQ as well on the openings. So that's where we are. Nothing else on the board here yet. So just be patient.
Oddly enough, the ticks are pretty flat here.
We know the direction. We know what we'll be looking for if we get an opportunity to enter on some sort of a bounce. All right, I'm just
Getting
making
a little
notes
bit
of
of a
what I'm
bounce
saying.
here.
So All right, so we can have it for the recap. Recap doesn't know what to say unless I post something.
There we go. Just
So
we kind of
again,
knew it
right
was
against
gonna.
these lows here, you normally would expect some sort of a reaction, right? A bounce. So
So
let's
look,
see if it
guys,
plays
we're,
out.
we're we're right here at the 4 hour, the 2 hour chart. We're right into those lows I was discussing earlier this morning. This is the area where we should expect the bounce, right? It's gonna get choppy down here. I think the easy part of the short is probably
Also,
is
one of our
likely over.
targets, by the way, is 35s, right?
Look at that. Nice. Look, coming right back up into the overnight low. Let's see what happens here.
So 68.35 target, all right, fulfilled with buy response.
There we go. Right back through the high. Woo. That's to be expected, right? Right back to the overnight, right back to the 24-hour VWAP, guys. So heads up, probably run into some traffic here. Definitely
Look at
don't chase
that.
this,
Push them down to
right?
drill them, just to drill them
Definitely
higher.
don't chase this high. We just rallied something like 25 points inside of, inside of what? Let's see. I have a really small time frame chart here. Let me just see if I can nail that time. Jesus Christ, I was like inside of 2 minutes. Less than a one. That's a minute and a half that it took the market to
Crazy
rally
fast.
25 points. 25-point rally in a minute and a half. Do you think that there were buyers down there? Yeah, for sure.
Crazy fast.
Oh yeah.
All right, our A10 did not trigger. So no trigger, no trade.
Right back to the highs. Right back to the highs. Right back to, oh no, well, not the highs, actually the lower high that we just formed in the
And
overmarket,
it
in the
is a wild
pre-market.
card day. Could be a wild day for that
Wow,
matter,
what a
but
smoking
definitely
move,
a
man.
wild card day.
Incredible move here, guys. Geez, we just went from 68.28. That's 30 points.
I didn't
From
see that coming. Did
68.28.
you?
Wow,
I didn't
smoking.
see that
That's
coming.
awesome. What a great move. Hey, let me know if any of you guys caught it, man. I would love to hear about it. That's got to be a great trade. You got to feel really, really good about it. Let me know. Please don't tell
Didn't
me if you
quite get.
guys
Would have liked to have gotten down to that D level,
just blasting right through everything. Now it went
but
to the 24-hour VWAP, and it's at the volume point of
didn't get
control.
there.
Who
So
knows
not
what
much we
happens
can
here?
do
It
about
probably
that.
slows it down. If it didn't slow down at VWAP, it's likely to slow down at the volume point of the 24-hour volume point of control, just because there's just so look, it's going right through again. Look at this. Unbelievable move here, guys.
All right, so let's
There's a
just
wave
work on
down there.
framing out the
It's
market again.
exactly what
You
I was
see the
talking about
early sell,
pre-market, guys.
early lean favor sellers, not
we,
anymore.
we
I mean,
can't
just
expect a bearish move towards in the lows while the semis and the Russell are still bid, right? Now you see my argument. Look at the move.
all right. So let's just stay relaxed.
Where's that chart? Hang on.
Just stay
Let me just
relaxed.
find that chart here. Look at the wick we left on the 4-hour chart, guys. That's smoking. Hey, don't say I didn't warn you, right? I had us all ready for that. We knew if we came down here, it was going to be respected. There were going to be buyers. There's
Look
no
at
way
that 60-minute wick
the
so far.
market
We're
was
still
going to
within the 60
collapse
minutes, only first 15 minute. Let
while
me
the
close
Russell
the
was bid.
5-minute
Come on.
trigger.
I mean, sorry, while
Look
the
at that
Fed was
5-minute. It's just huge.
just not going to happen.
Actually, 15 minutes probably going to look better, but nonetheless,
That's why it's best to have a good holistic approach to your analysis, right?
it's a
Like
ripper.
because if you're just looking at stuff through the microcosm of the just through the prism of ES alone, you're gonna miss certain stuff.
How would you have traded that? The question, right? And again, we don't know what's going to happen here, right? No, nobody does. But the point is, all right, it's always easy after the
And there's
fact.
you know
How
there's
easy it
no
is after the
there's
fact,
no way
right?
that I can sit here and say that I would have
Super
caught
easy
that,
after
right?
the
Like
fact,
I don't know.
right? Everything's crystal clear
It's
after the
always
fact. Well, guess
easier
what?
after the fact.
This is what I
But
call
I
the
didn't have
event
a setup down
horizon,
there at 68.28. I was looking for 68.12,
right? Just like a black
right? That
hole.
would have made sense to me. Sometimes the work lines up,
The event
sometimes it
horizon, right
doesn't.
here,
But more
right?
importantly,
Nobody knows
it's not always
what's going to
about
happen
the
next.
move that you caught.
Nobody,
A lot of times it's about the
not even the
move
big
that you miss,
institutions,
right? So at least
right?
we weren't set
They have what
those
they
lows.
want to do. They know what
Those
they
types,
want to do.
we knew that
Their
we went
orders,
into those
but
lows
nobody knows
discussed
what's going
in
to
the
happen.
pre-market. We knew that hey, if we get down there, there are likely to be buyers down there. We want to look for an area to get long within that scope, within that band. And so many times it's not about the one you take, it's about the one you don't take. Smoking move though. Wow. Man, yeah. There was a time where moves like this would give me like some type of FOMO, like, oh gosh, why didn't I catch it? Why didn't I catch it? And as I've matured as a trader over the many, many years I've been doing this, I'm more about, I see it differently now. Now I look at it like, gosh, at least I wasn't selling into the lows, right? I don't care about catching every single little move in the market. And I'm not going to chase this because that's not a part of what makes me money. What makes me money is a nice measured approach on a day in, day out basis, a process that I can repeat. Not chasing this move because I feel some certain way or the market is ripping. Do I wish I caught it? Absolutely. Of course. Who wouldn't? Here we go. Right back to the overnight high. Jeez, what an amazing move, guys. Is this news driven?
So you're measuring this low to high. Okay, everybody see this? This low to high brought you into the dynamic D level there at the 29. So yes, that could have been traded easily. I mean, I don't use the word easy. I don't like to say that, right? But that could have been traded if you prepared. So this would be a good lesson, by the way. Okay, in preparation, do your measurements, right? Measure once, cut twice. So you would have had to have been looking at that in advance, thinking about that. Was it on your checklist? Okay. All right. Was it on your checklist? That's the key. That's what it comes down to. How would you have traded the A4 Barbara Lopez style? I don't have a I don't have a premium showing here. Peter, the only other way I would think, again, either, would take, again, another thing you want to do is this, right? Let me just stop the freaking chart here from bouncing around. Drives me nuts, right? Here's another thing you want to do, and we've talked about this, many times. So plot your raise. Take a little a swing high. Again, sometimes they're micro ones, sometimes they're a little bit more important, right? Take your swing highs. There you go. You see where I'm plotting them out? Yeah, but the A4, yeah, okay, so, yeah. So let me put the A4. again, you can make this as all part of your plan. Okay, this is the A4. Okay, so what you could do with the A4, all right, your A4 shift is going to be pretty late. Your A4 shift, the price is here on the A4
Wow.
shift.
Wow, crazy move.
Okay,
Crazy
so
move, man.
you know, again,
Jeez.
you've missed quite a bit
Excuse
of a move.
my language,
we
but
don't
this
know
is
the rest of the move is
crazy.
going to unfold that way. But if remember,
This is
it's
going to make
not
today.
here where the A4 shifted here.
This is going to make today a little
But
bit
at what
different,
point did
guys.
the A4 shift,
Right?
At what price point does the A4 shift? It does not shift here. If you understand how the ATRs work, that's what we call the break point, right? That's where the A4 short.
Well, at least we weren't getting
broke.
short down there, right?
That's
at least
not
that's
where
the
it,
important part. And I'm glad
triggered,
I was
though.
able to share it with you guys in the morning, because coming into it today, I said it. Hey, we can't. There's no way we can be bearish down here, especially when we're in the lower part of this larger distribution. And look, we're in the lower part of this larger range. And look, we came down here, we looked below, we failed, we came back up, and now we're going right back to the middle of the range. I hope you guys weren't selling it down there. At least if I can't, if my setups and my and my what I'm sharing doesn't make you money, hopefully it prevents you from losing some.
Right? And it begins to shift. What would you do? The what? Okay, the what, the how. Okay, basically the OODA loop. That is how you prepare yourself. All right, so it's down here. Again, not looking at that D level, that's the dynamic D level, DDL.
Got to be careful up here, guys. Now,
right.
be careful. Remember, we have that
shifts,
resistance
how would I
area.
Trade that?
Let's see.
Okay, that's what you got to do. So I'm not going to say that you should have done that. I'm never like that. But
man, we blew right by that resistance area. That resistance area, 68.72 to 68.76.
That could be a signal there, yes.
In the setups,
okay,
guys, that's now support.
All
so
right.
remember that, right?
Peter's image there, that could be a signal, right, to enter, right? So you did have a premium there on yours, or you had an ATR there. That was your ATR. All right, yes. I see that. Yes. All right. So based upon what you're showing, Peter, that certainly is a signal that you could take as a Barbara Lopez style trade. So I agree with you. Now, perhaps a buy stop at the top part of the zone you could put. Okay, perhaps. Or if you're, again, a buy stop would be something you place in advance. Okay. Just understanding the buy stops, in types of orders. The buy stops is something you would place in advance. If you haven't placed it in advance and you are seeing it in real time, okay, the fastest is a market order. The only difference between a buy stop and a market order is that you're placing the buy stop, which turns into a market order, in advance. So you're planning on it in advance. It's the only difference. But if you're seeing it that in real time, but even before you see it in real time, Peter and everybody, right, to Peter's question in screenshot, you need to be thinking about that. Like, if, remember, prices coming into that previous low, first off, what would you be thinking potentially of what would be a response in and around that low? More sellers or buyers stepping in? Right? That's what you got to be thinking about. Is like, it's coming into this area. I'm anticipating more buyers to come into this area. So then it brings you to the next stage, reversing. Okay, I want to, again, you have the plan. I want to play along. And then if you see a signal like Peter's signal here at the A4, though that could, technically that, we're kind of looking at that as a sell, but remember, it could be a buy as well. And in a situation where it's coming off of a low, in this case, that could be a trigger to buy them. So the Barbara Lopez style trade. Does that make sense to everybody? Okay. All right. Thanks, Peter, for posting that. All right.
So anyway, guys, sorry about that. I got a little bit distracted. So again, back to the tape here.
Understand, look, I don't tell anybody what to do and how to, we're just trying to examine
recap the morning,
what would
right?
be our
I think that it's important to, what we're highlighting here, right? Is that sometimes it's not really all about, do I wish, of course I wish I would have nailed that low, right? And we were ready to buy them at 68.12 to 68.16. And I said that going into the low. But pre-market, right? More importantly, when I showed you this chart in the morning and I explained to you why I didn't think we were going to have a breakdown, right? I'll be the first to admit it. I thought we were going to go trade down to about 68.12, maybe 6800, test the lower trend line on the daily, right? The ascending wedge trend line, the 100 period moving average, as well as the trend channel support. I thought we were going to get that. I was salivating basically at that setup. And the way I was thinking to myself, okay, this is the way I'm going to engage that level. What I would be looking for was, let's let price get down there, right? Let's let it test and let's knock around a little bit. And then we enter later in the balance and catch it right upward. That didn't happen. But more importantly, at least we weren't trying to get short into that hole, right? Where we got our faces ripped off. Even though I did mention, hey, maybe we can try a fade at the overnight high, right? But the way price was coming up into that, I'm sorry if you did take it, but hey, we have to be a little bit better, a little bit more mindful. Price ripped right through there. There's no way I was going to place an order there, right? Just stand in front of a freight train and get run over. So just keep that in mind. I'm really glad that, obviously I'm glad that we didn't get hurt on the short side, but I do wish we were on the long and we weren't. Coming into those lows, I thought we were going to get it. I really did. So think about that, right? It's not always about the one that you take. It's a lot. Oftentimes, it's about the one you miss, right? We don't want to. We want to make sure that we catch a good one, we catch a good trade, and move forward and make some money on it. Not
you got it. It's like
crushed.
I think about it as like a coach on a whether you're basketball or football or whatever sport, hockey, you have plays, standard plays at certain times of the game. Goal line stands,
So
midfield,
now we're
right?
coming right back into the
First
VWAP.
possession, all those things. You have certain plays
There's an
that you're going
analogy
to.
that I
If
that I
if
want
the
to
defense,
use here, and it's kind of like so I consider my trade plan. Here's how I see my trade plan. And trading without one, right? I see my trade plan as like I feel that this is gonna may sound corny or cheesy, but I feel like the general of an army, right? Going into a battle plan. I'm going into Baghdad, and am I gonna go into Baghdad without a plan? Do you think that the U.S. Army went into Baghdad without a plan? I don't think so. And so the reason why I'm stating that is because oftentimes, even with a plan, you go into the battlefield environment, like you go into the day and your plan doesn't work out. At that point, it's about, hey, did my plan get me killed? Did my plan get me killed on that day? And even though you may not have reached your objective, which is to make points, extract points, and make a good living, even though you don't get that, well, did you get killed that day? If you didn't, then you survived to trade another day. And by killed, I mean, did your account survive the day? And oftentimes, guys, that's way better, because if we're patient about our setups, if we're patient about our approach, we all know that the easy trades come to us. The best trades are the easy ones. I'm watching this VWAP. The best trades are the easy ones. Those are the ones that and the more difficult ones are the ones that we struggle with, right? If we could only take the easy ones, the ones that work out right from the beginning, like what kind of a mindset do we need to be in to capture only the easy ones? Well, we have to have kind of structure and the discipline in place to make sure that we don't get run over, diddling in the middle, or trading at random areas, or just having a haphazard approach, right? Your battle plan, your trade plan is more than just because you have a trade plan doesn't mean that every trade is going to work, but it's the tertiary effects of having that plan, right? The tertiary effects is, hey, I'm not going to trade outside of my plan, so this way I'm not taking the losers that come from haphazard trades, right? That's preserving your account and keeping you fit to fight another day. Guys, I'm just looking at this is why we're back below the mid on the day. This volatility is insane. Where's the VIX right now? The VIX is at 21.26, and I said it earlier in the write-up. I said, hey, if the key to today is going to be volatility, right? If we have vol suppression, we could get a test up to 69.12. But look, volatility ripped us from the lows, and now it's got us back below the mid of the day. So here's what I'm doing right now is I'm switching to guns, right? I'm no longer am I trading the ES. I'm gonna feel it out with MES. And one of the ways that so MES is hard, right? Because it's harder to make money. But look, we're at what? 10 o'clock on the morning, and we already have a 55-point range. We have a 55-point IB. I think we're going to break that today, unless they suppress it. And so if we have such a wide range, right? MES, I probably can make some money with MES. But more importantly, right? This is the most important part for me, at least, is, hey, I'm not going to get killed today. I'm going to preserve some of the money I made yesterday, and I'm going to try to extract some more money today. But what I don't want to do is give everything back. Not sure what you mean, JB. I can go back and repeat it about the battle plan. Yeah. So what do I think is next? Right. Let's see. 55-point IB. This is going to be, I mean, this is super tough, JB, because look, we have this wide range, right? 55 points. And so, typically I want to trade around supports and resistances, but we just, so within that 55-point range. Okay. So I have a support at, let's just see, let me just check it out. Let me just look at this from this perspective. So 42 to 46 ES is support, right? We just came down here and tested that. The high, we just came down and made a low at 48.75, right? It's difficult because the what's next is, okay, so rejected from the lows, right? We breached the highs. We should see higher prices, right? But okay, so then where do we get in? Where do we get in where we can control the risk, right? Because easily on this day we can get in and we can be right and still get stopped out. And we're just chopping around between the 24-hour VPOC and the 24-hour and trading below the VWAP. So here's what I do, or here's what I'm gonna do. I'm gonna take a shot down at 42s. So that's trade setup number one. And the reason why, and I'm going to take it with MES because I don't want to risk too much on ES. And the reason for that is, so one, I know that 67.42 to 46 is definitely a support zone, right? There are probably going to be other traders that are waiting for that level. If we get down there, I'll try to buy some there. The continuation long level today. Oh, wait a minute. That might be it. Hang on a second. 60. Oh, so look at that. Yeah. So the 68.82 level, right? 68.82, the trade setup number 4. That's 68.82 to 68.86. We get above that level, right? The reason why that level matters so much is that continuation long trade is usually tied to GEX levels. The reason why those continuation long levels work so well is because that is tied into 60. Let's see. I'll tell you right now. Let me just give you the run through. 68.70 SPX, right? If we get above 68.70 SPX, there's a ton of deltas there that will need to be neutralized. So above there, they'll need to buy futures to neutralize their short delta. So above there, I think that's the better trade as opposed to buying 42s. All right, so let's talk about how we would engage that level, right? So obviously, we need to get above it, right? We need to get above it here. We need to get above it here and then do something like this. I think that's the trade. Because that also fits context, right? We were rejected from lows, right? On this chart, on the higher time frame, on the 4-hour look, we got rejected from this lower area. The idea is, hey, we probably go back and test 6,900-ish. That trade probably doesn't materialize. I would have to say for another hour or two. I mean, I don't know. At the rate we're moving, right, it could probably materialize a lot quicker. But I really like that trade. I really like that idea. Only because it's tied to those GEX levels. Does that make sense? Yeah, I really like that idea. I think that so. Or you know what? What was the breakdown short level? Hang on a second. The breakdown short level was 68.40. You know, 68.42 to 46 was a breakdown level, right? So maybe it would look like this. We come down here, bounce. Oh, you know what? What if we do this, right? Here's another idea. Say that we come down and okay, let me just remove this so it's a little clearer. Hang on a second. I love talking this shit because this is the way I love talking this with you guys because typically I'm doing this by myself. So let's say, and we have the continuation long idea. It's mapped out in trade number 4. Scroll back. It was posted early this morning. That's the one I'd be executing on the long side because I don't want to diddle in this middle. But let's say the breakdown short, right? Let's just cover that basis. Say we don't break out to the upside, right? If we don't break out to the upside, we have 68.40 to 45. That's support. So let's say we come back down here, we bounce off of it. And then we do this, and we don't go anywhere, and then we come back down again. I think we sell it below. I think we sell it if we lose it with strength and momentum. I think that's a momentum play. That's a momentum short. Even though I don't like shorting, I don't like that idea. I think that's a momentum short down to to the overnight low. All right, so that's great. So guys, that's what I'm looking at. I'm looking at the continuation long mapped out in the setups, and I'm also looking at the breakdown short mapped out in the setups. That's what I'm going to try to execute. I don't really want to diddle here in the middle. It's going to be tough. There's going to be price action that I'm going to have to sit through. That I'm going to have to tell myself, hey, you know what? I'm not chasing. If it goes, it goes. It's fine. I just want to trade well. I want to trade in a way that's as a process so that I can repeat that process and do it again tomorrow. Can I jump in and scalp something? Sure, but that's like, that's being penny wise and pound foolish. Everything has to, for me, all my trades have to run through a filter. I want to be able to, I don't want to get lucky. Lucky is good if it's a part of the process. I'll take that. But yeah. I love when I get lucky and it's a part of the and it was like so like say that I was as I was alerting the chat earlier, we were gonna get long at 68.12 down there, setup number 3, I think. Getting lucky would have been if we were long because it was part of our setup. At least for me, it was part of my setup. I got long, and then I got this rip. Like, wow, that's lucky. And that every great trade that I've had has started that way, right? So I once had a 114-point intraday trade, and it was probably one of the easiest trades I've ever had. I got in and price never looked back. But I got lucky on that day. But what got me long was the process. What the market did, that was the lucky part. Because typically my setups are, I'm at a 5-point target, something like 55 to 60% of the time, and 10-point, like right in that same area. But 15-point scale is hard for me to nail. I consider that lucky, and anything above that is super lucky. I think Handle's going to jump on pretty soon. Oh, it's funny. Anyway, JB, did you trade it today? Have you done anything? What do you got? I know John B was swing long yesterday. I hope he didn't get taken out on this vol, because I remember he posted he posted yesterday in the I Am Pro. He mentioned that he was long ES with something like a 30-40 point stop, and I love that style of trading, right? Because it's it's battle hard in trading, right? Like you can sit through if you're willing to sit through a 40 point noise for you on your stuff, that tells me that you have conviction and you're kind of seeing the larger picture. And I kind of like that, although I can't sit through that. Oh, that's nice, dude. That's wow. That's 3 10 pointers. Man, that's a day right there. That is a day right there. I mean, yeah. For me, I was like, yeah, I'm done. Come back tomorrow. um, yeah, I'm just trying to extract some. I'm just trying to extract some money. I'm trying to make, I'm trying to make 2 to 5K, and I'm trying to get the hell out of Dodge. Right? I'm trying to keep the lights on, keep my wife going to Target, and then just chat with you fellas. Sticky volatility is sticky right now. Very, very, very volatile. So let's just talk about this though, right? The worst case scenario, we have a 55 point IB. What if we don't break it? That would suck. That would really suck. Like, okay, so here's why I think that would suck. If we have if we stay within this range for the rest of the day, and we form like a bell curve in here, right? Where on the right hand chart, where we just like do something like, where is that tool? Never quite understand how to work this one. But anyway, you guys get my point, right? If we just stay right in here, and we don't break the range, right? I gotta get that drawing pen that David has. I gotta talk to him about that. That would make my life so much easier. I feel like a half a retard trying to use these drawing tools. If we just stay within this range, Epic Pen. Thanks, David. So if we don't break the initial balance and we just stay in there, so this is the reason why that would suck, because that day probably ends with me having a stop out, right? Like, because that means I tried something and it didn't work. So do you use that on? Do you write on your monitor with it? Oh, it's a software. It's not hardware. Oh, so you use your mouse to write with? Interesting. Right. I'll take that as opposed to this chicken scratch I'm doing. Look at this. We had from the low was 68.48. Jesus, that's a 20-point rip, and we didn't go anywhere. That's enough to drive me mad, right? Because if I bought the low, right, let's say I bought 68.50, it traded as high as 68.71, and then it came right back down to 58. Yeah, I mean, I don't know. I just get your 10, and get the hell out of Dodge. Like JB did. He got 3 10-pointers, right? Stick and move. I think Handel's gonna jump on now. I'm not. Can I? I can't hear him. Is he talking with me? Am I missing something? I love to. So Handel's got a super unique approach. Very different to what most of us are doing. Right. I'm a technician. Yeah, I'm gonna alert him. See if I can alert him. So I'm a technician. I'm using traditional technical analysis for larger structure. Let's see. Let's ask Marlon.
Let me see.
There he is.
Hold on 1 second.
There he goes. So
Can
yeah,
you hear me now?
I can hear you now. Perfect.
There was something on my screen that is showing that it's muted, so I can't. I don't know if you can hear me. But you can hear me.
I can. Yep. And I think Bobby just said that he can hear you as well.
And I have a screen up in there too, Manny. Can you see my screen?
I cannot. Can you, Bobby? Can you see his screen?
Oh, hold on. I think I got to share this again.
Okay.
Let's go here. Handle Pit. Start screen share. And entire screen right here. Share. Now it should be in there.
Yep.
Do you see my screen now?
Yep, I do. Yep.
Okay, thank you.
Love it.
Sorry, morning, guys. Danny asked me to come in and show you kind of what I'm doing. I have a couple things I'm going to share with you. I didn't hear everything that Manny was saying. I take a look at the open range. I have a 25-minute open range. And this was a really big open range today, this first 25 minutes. And I keep track of that every day on my sheets. Let me see if I can, I close my stuff out. And let me just go back and grab this real quick. Ooh, 1 second. When I was trying to get into the room with all my stuff, I was having a little bit of a problem because I'm not used to like going into 2 different rooms. Let me go to my library and schedule for maintenance.
All right, so just basically in the middle, again, we can frame it out, right? Get up here about the 75s, right down to about the 50s. Pretty decent wide range. Again, bulls are trying to muscle control here, it looks like, but still basically just kind of a two-way play right now.
Up. Right here.
Coming right back into the highs, guys. Coming right back into the highs. Looking.
Right. Again, we're long off the 810 scaled out.
Still just like a, we got to consider that this is probably going to fade from up here somewhat. But let's hear what Rich has to say. He's got an interesting.
Okay, thank you, Manny. Yep. Sorry, I closed this out. I didn't mean to. Anyway, I look at the open ranges and the averages. Here's the 30-day, the 10-day, and the 5-day average of the open range. And I consider the open range to be the first 25 minutes. There's a long reason why I consider that. And you can see that it's basically been around $30 even for the last 30 days. And this open range today was really big. So 68.28 to 68.83. That's like almost double what the average has been. And that open range was even bigger than the first hour average, because I keep track of these, because when I see something like a open range that basically fits that pattern, whenever we break out of one side or the other, it tends to like expand to the first hour. And then we have the daily range down here. And today's open range was almost the entire average of the daily range. And I redid my sheets this week, so I got a couple of things in there that I got to correct. But anyway, this is looking like it's going to, go up here and break out. And I look at these standard deviation levels, and what that is I take a look at the settlement price, and I use a 4:15 settlement price instead of a 4 o'clock settlement price. and I used the options pricing model to with implied volatility levels to get what one standard deviation move would be based on the current implied volatility and yesterday's settlement price, and it works really well. There's quite often the market reacts at these one standard deviation levels because there's so many options traded these days that the big groups have to react when it gets to a one standard deviation. And we know that one standard deviation encompasses 68.5% of all the events. And then 95.5 is two standard deviations. And, on occasion we make it there. But anyway, that's
Rich, can you just back up a second? Can you say that how the range correlates to the options market? I missed that part. I really want to hear it.
Okay, we know, Manny, that there's a lot more options being traded now than ever in the history of the market. I mean, we've both been trading for a long time, and there's so many options being traded. And a lot of them are by big groups or, these big HFT Citadel, And when the market reaches a one standard deviation move based on implied volatility, those options, big trading groups, they'll have a position manager. They'll have lots of traders trading different things, but the big position manager overseeing the entire position, and it's all complex. It's it all goes into one position basically with those big groups.
Got it.
But they have to make a gamma scalp at one standard deviation because it happens on obviously 68.5% of the time. When you get there, if it's a negative gamma scalp, you've got to make an adjustment. If it's a positive, you're still going to make an adjustment. You got to take the scalp. You can't let a one standard deviation move get away without reacting to it. It just works that way. So that's why we see a lot of times that when the market makes it to those levels, even if it's going to go further in that direction, it'll hesitate at one standard deviation for a little bit. I mean, almost always, and then a lot of times it reverses there. Or very close to it. I mean, you can pick out any day of any day in the last year, and I can show you my price levels from a sheet from that day, and I can go back and look at the market, and I'll pretty much guarantee you if you give me 2 or 3 days that a couple of those days it will hit my numbers. I mean,
well, you can do a lot with. All we need to know is where the market is going to have even a minor reaction. You can do a lot with that information.
Oh, absolutely, and it will react there. It has to. And the thing about those standard deviation levels is it's a dynamic measurement. It's not. It adjusts with implied volatility adjustments and market activity. So it's not something that's static. You can't. It changes according to the input. The market decides where that level is. We don't decide. And the market decides what implied volatility is, and obviously when the market starts to go down, volatility usually goes up. So you can expand those ranges a little bit, and when it starts to go up, a lot of times volatility will go down, and so you can contract a little bit, but it still reacts at those numbers. And you can see like this open range that I have, this is a pretty typical kind of thing too. Like here was the 9:30 cash opening right here. The market traded down. These are 5-minute bars, and then it exploded back up to the upside. I don't know what event triggered that. I was busy doing other stuff, but then it came back down. The reaction came down almost to the opening price again, and here then it came up and. Here it's just trying to take out this top side. So if we go higher, it's probably going to react and at this level up here. We can go look at the NASDAQ, and the NASDAQ is done pretty much the same thing. It came back down almost to the settlement price. This was obviously a big range for the NASDAQ, and now it's breaking out. The NASDAQ's a wild beast, though. It will exceed these levels on a regular basis because it's pretty unruly. It's the wild child of stock indices. I mean, it's because, the top 6 or 7 stocks, those mega cap stocks, are like 60% of the index. But here's another thing that I do. And I was actually going to go over this in my room. And so I'll share it here today. Let's see, I can do it here. So I have a lot of databases. This database here has like 11,640 days in it. I just updated it this morning. And one of the things I do is I'm looking, we're right now today, we are it's the third day, but it's today, today's Tuesday actually. So it's the 4th day from the end of the month. So we can go in here and look at this. And I have the 4th day from the end of the month going back to 1980 here in the SPX. So this tells me what every month, what the 4th day to the end of the month has done since 1980. Let me hide that. And we'll just put the inputs in here. I'm running a lot of stuff on this computer, so it gets kind of slow. My charts soak up so much stuff. I have 4 screens of charts on this machine. Let's go here. And then we'll go here and we will look at, I can look at this by year, by day of the week, by actual date. Anyway, we're in February, so we'll just look at the February 4th day to the, so we'll look at all the February since 1980, and this is the 4th day to the end of the month. And then we'll see what this has done. It's calculating down here. You can see the threads. There's some things I can do to speed this up, but I'm adding a lot of stuff to this program in the process of it right now. So in the 47 years of data that's on here, this particular day, the 4th day to the end of the month in January, has been up 23 times and down 24. So it's about 50-50. And I'm looking to see if there's any seasonality in this particular day. And as I say, it's right about 50-50. Now I can further go and look and see when the 4th day of the month is a Tuesday, and see if that affects it, because the day of the week definitely influences that too. And I can see that there's been 20 of these times when it's been on a Tuesday. And I actually ran these numbers for this and for tomorrow's days. And I'm going to run them for like I run for like the last 5 days of every month and the first 5 days of every month to see if there's any particular seasonality. And I've also looked to see if it's, if it's an up year at that point in time, or if it's a down year at that point in time, the influence, because everything has an influence on what's going on. So right now, if we look at this day, the 4th day before the end of the month, when it falls on a Tuesday, it's dropped down a little bit. It's 9 and 11, so it's got a little negative, very slight negative bias to it. And I can go in here and look and see what the average, if it's been an up day, the average is 0.76. If it's been a down day, the average is 0.61. I mean, so, and you can go up through here and look at what the daily changes have been and see if any of them are, unusual, that have skewed it a lot. You can see that we had a big down day in 2020. I think that was COVID. So, and somewhere in there, I think it was March or the end of that when they turned around and started going back up. But anyway, right now it looks like it's got a slight bias to the downside for today, but we've been trading lower. And let me go here and put this back here. we can look at tomorrow. Is actually tomorrow I think was the best day of the week. When I did this, it had we can look at that real quick if you guys want to. I do.
I'd love to.
And let me I'll just clear this out and we'll just start fresh. And then the other thing is, I ran a study early in the year, and which I've known for a long time. If the first quarter is up, and in particular, if the first 3 months of the first quarter are up, like if January's up, February's up, and March is
can you repeat that? Oh my. Geez, that's important to know. Yeah, that's important to know. Wow. Okay, good to know. Write that one down, guys. I told the room to write that. They might want to write that one down. That's super useful. So if the probabilities are for tomorrow, like Rich just state, guys, so that immediately I'm thinking right away, okay, if tonight, if overnight, if I wake up in the morning and I see any red, I see any weakness, and I'm at a support level, that just adds conviction to your trading. Yeah, right. Exactly. Yep. That's what I'm thinking. August, September. Okay. Yep. Okay. Okay. Wow. You know, some of the cycle stuff that I read was actually hinting towards a red March. What do you think? What are your thoughts? What does your data say? Okay. Hmm. Right. Uh, Right, right, right. I was going to ask about that. So say that. So I was curious with with the advent of the increased um, volume in the options market. Has that date have you seen that arbitrage kind of disconnect and those more those statistics be skewed a little bit in light of the options market? No, I don't. Got it. Yeah, but I understand Max Payne for sure. Okay, I get it. I get it now. Right. Mhm. Got it. Okay, great. Are you still long that? Oh yeah, yeah, yeah. I remember hearing that. Wait, isn't don't we have AMD and Nvidia on deck next week, or is it this week? Okay. It must be you making money. Got it. Thanks, Jay. Yep, it sure is. Look at that. Okay. I've got to use the. Excuse me. I'm going to be listening. I have to use the bathroom. Give me 2 seconds. $6,900. Right. Is that SPX or is that ES? Okay. Okay. Good. That's kind of in alignment with some of the stuff I have. I'm seeing 6,900 as the ceiling for today as well. Okay. Got it. Yeah, that's what I'm looking for. Uh-huh. Oh, so, yeah. Okay. I get that. That's kind of like my continuation long setup. Okay. Yeah, that's big. That's a big. It's a big variable, right? I mean, we. I mean, I. What are your thoughts on it? Excuse me. Can you say again? I'm sorry, I didn't hear you. Sorry. Yeah, for sure, I do. Yep. I don't use it as well as I should, though. I don't think. I think I'm still using it kind of like. I think I'm still the guy who's using it like I'm just using it to write stuff up for me really quickly. But I have used I've used it to code a couple of things. But yeah, I get it. It's a game changer. Yep. Yeah, that's for sure. There was a Marlon was telling me about how entrepreneurs are getting burned out right now because they are often working to no end because of all the stuff that can get done with AI, and I often find myself in that basket. Yeah, right. Yeah. So did you see yesterday IBM was down 10% just on some COBOL AI COBOL news? Mhm. Yeah, it's a huge variable. Right now people can only see that. I think that's an interesting standpoint, right? That how it improves productivity. With the way I see it is that with with technologies that change society as a whole, there are always some things that some predictions that are going to fall flat. There's going to be some unintended consequences, but there's also going to be a lot of good that comes out of it. And the only framework we really have for that is the internet that can kind of fit it. And the internet, we're going to look back at the internet and its evolution as moving at a snail's pace compared to what AI is going to move. Yeah. So everyone can be, and like, there's no excuse now for ignorance, right? You can be an expert at anything in a short amount of time. So you're saying that correct me if I'm wrong, but what you want to do is you want to let AI evolve on its own and not be controlled or not be manipulated. Oh yes. Okay, I see where this is going. That's a great point. That's why generally we can say that as a species we are better off now than we were, say, 200 years ago, right? It's because of education. It's a really interesting way of looking at it. Right. Mm-hmm. Yeah. Right. Good point. That's a fantastic way of looking at it. I love that. It's so optimistic. It really hits on a lot of great points. I mean, it's really, it's great perspective. And let me get your opinion on this thought, right? So, and here's something that the thought that I've kind of been mulling about, right? So we know, the old adage, right? If it bleeds, it leads, right? So right now, there are people trying to earn a living off of AI, and they're they're gonna make more money if they have a YouTube headline or a social media headline that says, AI expert predicts that jobs will decrease by 90% in the next year due to AI. Will that get more clicks, or an optimistic post that says AI can educate poor kids in Burundi? Same. Yep. Agreed. That's a universal truth, right? I think that's right. You're correct. That's a great way to look at it. I love that perspective, Rich. Like I said, it's super optimistic. We need more of that. Well, let me share something else with you along those lines. Is that so? My kids, so my oldest is 14, and here's something that's interesting that's happening to them. Chat GPT is what Google was to us. So imagine the collective intelligence that we might see, the advancement in the collective intelligence that we might see. Yep. Every day they're like, just chat, where we would say where Google became a verb for us, like just Google it. For them, it's, oh no, Chat GPT it. So imagine that. Yeah. It's going to break down communication barriers. That's another good way of looking at it. Yep. Right. Okay. Very friendly people from Nepal. To be honest, I've had the pleasure of meeting some. They're really nice people. The Nepalese. Yeah. Wow. Yeah. That's nice. Yeah. Yeah, good stuff. Hey, I really got to use the bathroom. I'm sorry. But great stuff, Rich. Thanks for coming on. Really appreciate your work, guys. Rich has got great stuff. That's why that I was saying before you came on. I always love to hear your perspective because, I'm just a technical analysis. I'm a technician, but getting a quant's perspective is also very helpful. Wow, impressive. All right, I've really got to use the bathroom. I gotta go. Yeah, I think that 6,900, 69.10 to 69.15 is where we're going to probably cap out today. I feel like that's a magnet though right now. I feel like we have to test it. I think I wrote about that in early morning. In fact, I know I did. Which post was that? Anyway, just let me see. All right, guys, I'm gonna log off here for a bit. I have to. Yeah, 98s are definitely important. I've got to get some coffee and get something to drink. So, grab a bite to eat. Yep, you're welcome, Bobby. Thanks for listening in. Appreciate all the contributions, guys. Back later this afternoon for a little bit more for the 2 p.m. afternoon midday. See if I think so. I'm hoping that. So here's why I want to come back later on. Yeah, I want to come back later on in the afternoon around 1 or 2 o'clock because the VIX is at a 20, guys. And I said this last week when we were a few days ago when we were right at this specific point. I've gotten 5 and 10 points out of the trade. I hope some of you guys were able. Rich, I didn't want to interrupt Rich. I hope that some of you guys were able to follow along with it. It looks like the last lot is going to get stopped out at break even, but I'm not going to touch it. I'm just going to let it work. Again, I'm trading for 5 and 10 points. That's I can make my living there if I do better when I don't touch them and I don't take like a smaller win in here. I can outperform my performance changes dramatically when I leave these alone, when I either accept a break even or the higher target, which would be 20 points. I'm willing to take that risk because I've already gotten paid on the trade. The way I look at it is I'm in a risk-free position with nothing to lose, and I'm swinging for the fences, right? It's either 20 points or a break even. And that, just to share real quick, if you guys adopt, you'll if you adopt that kind of that framework, that mentality of letting that. I used to constantly take less on these trades, take take it off here as it was coming back against me. And oftentimes, yeah, more times than not, it's going to take me out at break even. But the times that it doesn't, and that could be, I would say 3 to 5 times a week is where, you'll hear me post that I got a 20 or a 30 or a 40. It's because I didn't touch it. I left it alone. And that is really the difference maker for a lot for my performance. I mean, that one trade, those three to 5 times a week where I hit those outperformance trades really make up for a lot of the little losers and keep the lights on, as I like to say. All right, back later.